In today's video, I'm going to talk about how to use the Analyze tab on ThinkorSwim. Now, I've been trading for 8 years. I'm going to share my screen and I'm going to show you the most effective way to use the Analyze tab to simulate out my trades to figure out how much I'm going to make or lose so I can make proper and educated trade plans. So if you head over to Analyze and then you click on Add Simulated Trade, well, this is where you're going to be presented with the opportunity to choose what stock you want to trade. So let's say, for example, we want to trade Citibank. Okay. Now we're going to go about choosing our expiration. So let's say we want to go with the September 13th contracts. And next, obviously, whether you want to buy a put or a call, let's just say theoretically we would want to buy a call. Okay. Let's say we want to go with the $62 strike. Obviously, under the ask side, when you go to buy a contract, all you're going to do is hit buy. Okay, and you can see here, we've got the September 13th, $61 calls. I like to adjust this so I'm only looking at one contract, and then I head over to the risk profile. This is, in my opinion, very overwhelming looking for most of you, and that's probably why you're watching this video. But good news, you don't have to use this chart. Honestly, if you want, you can stay here on the options chain, but I like heading over to risk profile. And all you have to look at is price slices. Now, under price slices, I'm going to go ahead. I'm going to remove one of the slices. So I'm only going to look at 2 price slices. Now, this is where we're actually going to go about setting the levels at which we want to essentially calculate out or simulate this position based off of. So let's say we're trading C. Let's go over to ticker symbol C and look at a chart here. Now, we're obviously buying calls, so our bias is long. So let's just say, theoretically, we want to set our take profit at 62.61. Okay, right around this area, 62.61. Let's say that's our take profit. Now we're going to go back to Analyze. Now we're going to go to STK. This stands for stock price. Okay, under stock price, you're going to type in 62.61. That would be my take profit. And next, based off of the chart you're looking at, you're going to obviously identify from a technical or fundamental perspective, or however you go about trading, where you're going to be wrong. And let's say in this instance, I am going to set my stop loss where I'm wrong right here at the 15-day EMA. Okay, so at 60.62. Back to Analyze, 60.62 is going to be the stock price. Okay, now, then only other 2 things you're going to have to pay attention to are the date up here. Okay, this is going to be the contract expiration date. Obviously, we chose the September 13th contract, so let's go ahead. Let's make sure that September 13 is selected. Next, come down to the second date. This is the date for at which point you're going to be doing the calculations. Okay, you're going to be seeing by this date you choose here. By this date, well, you're either going to have made X amount or lost X amount, depending, right, based off of whether you hit that 61.61 take profit or that 60.62 stop loss. Now, how do we actually decide when we're going to get out of this trade? Well, I'll show you how I go about doing it. Now, I built this tool. It's called the ADR calculator. I will put a link in the description below if you want to download this tool and use it on your ThinkorSwim platform. And all you're going to do once you download it is go to settings, and you're going to go to edit studies and strategies. Okay, obviously right here. And then you're going to click on the Daily Traders ADR calculator. Now, based off of your average hold period, how long on average are you holding a position? For me, it's 5 days. So the user defined day is going to be based off of your average hold period. Now, this only works, I will say, looking back over the last 180 days on a 4-hour time frame for swing trading. Just this little tool, which I'll cover really quick. So I'm going to apply that. Obviously, you can see here our 5-day projected movement. Great. Now, if I go to drawing tools, and I go to trend line, what I like to do is I like to see, hey, is this a realistic target in the first place or not to hit? So I'm going to essentially drag up to my take profit, and I can see that we're sitting about 1.6% off of my take profit. Is that move on a chart realistic to see happen in the next 5 days? I think so, because the 5-day projected move on this chart is almost 6%. Now let's do the same with my stop loss. And you can see about 1.6%, again, within that 5-day projected move. So I'd say this is a realistic target to hit within 5 days. So let's go back to analyze. Let's go 5 days out. Now today is the 19th of August. So 1 day, 2 day, 3 day, 4 day, 5 days. So the 23rd of August is when we're actually going to be doing these calculations, saying if we hit our take profit or our stop loss on this day, here is how much we're going to be up. Okay, so this is our P&L open and this is our P&L day. Okay, and you can see here our P&L open is actually negative. So let me give you another example. Let's choose another stock. Let's say Tesla. Okay, again, we're going to choose the contracts we'd like to simulate out. Let's go with the October 18th contracts. We're going to go down to, let's say we're going to buy puts. Okay, we're going to go down the ask. Let's say we're going to buy the 215 puts. We're going to click on buy. Again, very straightforward. You can do this based off of however many contracts you want to buy. I'm just going to adjust this to 1. And then I'm going to go to the risk profile. Again, you can stay on the add simulated trade tab and just close this out because it is a lot to look at. And you have the price slices here. So we can even do it on here. So let's go to our Tesla chart and let's just say theoretically based off of our trade plan, obviously we want to go short. So let's say our take profit is going to be here at 203.64. So we're going to go back to analyze, take profit at 203.64. Now our stop loss where we're wrong, let's say we set at 225 or 226. Okay, so let's go back to 226. So 226. Now, again, 5 days out, okay, to the 23rd, because that is our average hold period. We can go back to the chart. We can actually look to see if this is a realistic move to happen within the next 5 days. Okay, we're going to drag up from where we're currently trading. It looks like we're about 3.3% off of that stop loss. Okay, that's within our 5-day projected move, which is almost 13%. Then we're going to drag down to our take profit, and you can see we're sitting about 7.5% off that take profit, again within that 5-day projected move. Great, back to the analyze tab. We know that is a realistic target to hit within the next 5 days. And that is based off of our historical trade data and how long on average we're ending up holding our positions. So back to date, obviously just double check that's correct. And then remember what I said, if you go back to risk profile here, you do want to make sure that this date has been adjusted. Most of the time it will do it automatically for you. But again, these are the October 18th contracts. So we're going to go out to October 18th. Now we can see here, based off of our stop loss and take profit, if we hit our take profit on Friday, this Friday, we're going to make $676 on this contract, which currently costs $1,635. Okay, not bad. And then you can see if we hit our stop loss, we're going to lose $325 for this one contract. All right, we can decide then if that trade makes sense for us or not. And I'll show you a quick way that I actually go about figuring out this next step of the process as to whether or not I can take this trade based off my historical performance and obviously the risk at hand. I'll show you my risk management calculator. Now, if I pull this up, this is actually a tool that you'll get access to if you join my mentorship group. So I will put a link in the description below to that. But essentially all we're going to do here is type in our contract value, which is 1,620. And I've got my win rate, which is 70%, my average winner, which is 15%, my average loser, which is 5, and my account size, which is 500,000. And I'll show you right here. You can see connected real-time data. This is my live trading account. It is currently 10:11 on August 19th. I've got $521,000 in my trading account. So I just went ahead and pulled up another set of contracts. I want to finish showing you. These contracts are 2,375 a contract. So 2,375 a contract. Again, my win rate, average winner, and average loser. This is just for an example, my account size and my risk percentage. Keep in mind that the market is open. So you're going to have to adjust this obviously based off how fast the stock is moving. But let's just say our downside is going to be 252. Our upside is going to be 693. Historical data based off of your trading performance. And we can see here, we got 100% back on the risk scale, and our position size is going to be $20,000. So I would go ahead, I'd put in $20,000 behind this position. So remember, when you're trading, you got to make sure that you are adjusting your position size according to the risk at hand. And if you want to even make more money out of your trading system, look at your performance, look at your historical data, look at your books, and you'll see that some of your trade setups, or however you go about categorizing a trade. Some of them will yield higher expectancies. Some of them will have higher outcomes, right? More times on some setups, you'll hit your take profit versus others. And those are the opportunities that we want to make sure our money is in. So that is essentially what this position size calculator does with inside my risk management calculator. And we'll run through one more example. Again, if we just go to analyze, we're going to type in a random stock, let's say LLY. We're going to go about choosing some contracts. Let's say the August 30th, $930 calls. We're going to click on buy. Okay, we're going to go back to the risk profile. We're going to make sure we are 5 days out. We're going to go up here. We're going to adjust the date to August 30th. That is our expiration date. We're just going to look at one contract right now, okay, because the risk management calculator is actually going to give us our position size. So we don't know how many contracts we should buy yet, but we're going to delete that slice. Let's go to an LLY chart. And again, we were looking at calls. So let's say our take profit is going to be at 966, just theoretically. So 966. And let's say our stop loss is going to be at 878. Okay, so 878. So we could see based off of this, we're going to take our asset value, which is 1670 per contract. Our upside is going to be 2,471. Our downside is going to be 1,470. And then look at that. We actually got a 66.67% on the risk scale. So apparently this trade is just going to exceed the amount of risk we should put on based off of our values and our variables. Now, I hope that makes sense. I hope you guys are going to be able to approach trading with a more analytical, a more confident, and a more educated approach. And if you are looking to find that consistent profitability, again, I will put a link in the description below to my mentorship. You can learn more about what is included. I'll see you in the next one. Subscribe for more. Later.